Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Good morning and welcome. You're watching the first edition of DayBreak on Bloomberg Quint Live. I'm Alex Matthew. First, the headlines. Asian markets start the week on a positive note. The SGX Nifty indicates a strong start for the Nifty. Shinzo Abe's ruling coalition retains a two-thirds majority in Japan's lower house of parliament, setting the stage for Abe to become the longest-serving prime minister in the post-war era. Revenue Secretary Hasmukh Adia says the GST tax structure needs a complete overhaul. He tells PTI that a lesser burden on small and medium enterprises will help increase tax compliance. And the country's oldest and largest power exchange, IEX, is set to be listed on the exchanges today. Now let's turn to the US markets. Two of the three major stock indices in the US hit record highs on Friday after the Senate approved the budget resolution for the financial year 2018. This is seen as another step towards achieving President Trump's promised tax reform. The Dow climbed 0.7%, the S&P index 0.5%, and the Nasdaq advanced about 0.4%. Let's take a look at the Asian markets now. The Asian markets have opened in the green like we told you, but they gave up some of their early gains. The Nikkei is currently trading higher by as much as 0.8%. Now, Prime Minister Shinzo Abe's gamble on early elections in Japan has paid off. From what it seems, his coalition party won a two-thirds majority in the lower house in Saturday's election. Let's hear from Stephen Engel of Bloomberg News on the road ahead for Abe.
Yeah, it looks like a continuation, of course, of Abenomics and the ultra-monetary easing policies of Mr. Kuroda at the BOJ, at least for now, because, as you rightfully said, Shinzo Abe has continued that mandate. And, you know, it was really a victory based on, one, a crumbling opposition, obviously, but two, a referendum on Abenomics. We've had 6 straight quarters of economic growth. We have unemployment below 3%. We have the stock market up in areas we have not seen since the late 1990s, since 1996. Just looking at the board here at the Tokyo Stock Exchange, the Nikkei 225 up another 169 points. The Topix up about 12 points. So they're on good runs. We are also seeing the yen weakening. It's not to levels it was earlier today. It was at 114 to the dollar. Now 113.89. Again, that's about a 3-month low for the yen, and that is good for Japanese exporters. So it seems the wind is in the sails of the Japanese economy, and as well the ruling coalition of Shinzo Abe and the LDP and the new Komeito party. This was the headline, I should say, the Komeito party. Here's the headline in the Sankei Shimbun this morning, which really sums it all up, basically saying the LDP, the Komeito, Taisho, big win, and also the Prime Minister stays on. So what we're going to likely see is a continuation of Abenomics, as well as Mr. Abe's plans to hike that consumption tax, but not until 2019, and also perhaps slow moves to revise the pacifist constitution.
Let's turn to the Indian market now. Darshan Mehta and Agam Vakil are here to set us up for the day's trade and to give us all the updates in the futures and options space. Morning, guys. Darshan, first to you. How does the day look?
Good morning, Alex. The start looks good because the SGX Nifty is indicating a positive trend. Let's see how the US markets panned out, and the picture is very clear. Record highs for the US markets on a closing basis, on an intraday basis. The Nasdaq ended flat, but positive move coming in on the Dow Jones, up almost 0.7%. The S&P was up close to 0.5%. The US futures currently are indicating a positive outlook. Europe also ended in mildly in the positive, the CAC, DAX and the FTSE. The stock markets of Spain and Italy were up almost close to almost 0.5% to 1%. So that is where the action was. Let's see how the Asian markets are panning out. Extremely positive start coming in from the Japanese markets. Political situation panning out in Japan, almost 0.8%. The other Japanese markets are also positive. Now the SGX Nifty is indicating a 30-point gap up, but remember, we were short on Friday. The SGX was working. We closed at 10146, so indicates now 10198 indicates close to a 50-point uptick on the opening as far if you take this SGX Nifty rate currently. So that's the trend that's coming in. ADRs, what ended positively? Wipro ended up almost 2%. Dr Reddy's was up almost 1%. Positive news again coming in Dr Reddy, so that will be in focus. ICICI Bank and Infosys were rather weak. They were down anywhere between 1.3% to close to 1%. How did the commodity and crude basket pan out? Crude is trading higher after rallying on Friday. If you're looking at it, Brent has actually WTI has recovered above the $52 mark. Brent hovering in and around the 57 mark. So it yet is to cross the 58 mark that it crossed a few days ago. Negative close for all base metals on the LME. Even on Shanghai, the base metals have actually started on a negative note. Most of the base metals, the iron ore is down almost 6%. Rubber is down 2%. Copper and aluminium are trading weak on Shanghai currently. So overall, extremely weak. Gold is trading lower for the second straight session. So it's not a very good day as far as commodity is concerned. Let's take a look at the other cues. This is the data that came in on the Muhurat trade. So it is expected to be light. FI sold in almost 44 crores in the cash market. DIIs were net buyers to the tune of 40 crores. So pretty much even Stevens. But what is more important, if you see the month-to-date number, FIs have sold in almost 4,500 crores in the cash market. Just look at the DII number. They have bought in almost 9,000 crores in a single month. So it's a market that is driven by liquidity that's come in from the DIIs at this point of time. What were the other trends as far as the Nifty is concerned? All the major indices and sectors ended with a negative bias. The VIX was up significantly. The VIX was up almost 7.5%. So that's the basic cue that's coming in. Nifty Bank cracked over 1%. Weakness was seen in metals and oil stock. What contributed to the fall on the Nifty? So basically it was the banks. So all the three private banks, HDFC, ICICI Bank, Kotak were down in trade. Tata Motors contributed negatively. What held was the telecom stocks. Bharti Airtel was doing well. Infosys was doing well. But overall, a weak trading session. Agam, what's the FNOQ indicating at this point?
Well, surprisingly, Darshan, given the fact that it was Diwali, the volumes were low and we still saw the Nifty come off to a certain extent. So what's really happened in the futures is we're looking at unwinding of nearly 1.4%. That said, when it comes to the Nifty Bank as well, there was weakness, as Darshan just pointed out. And while the index dropped by as much as 1.5%, we did see an increase of as much as 3% in open interest, which means that there were fresh shorts building in there. Let's also take a look at some of the other key variables, and by that I mean the India Volatility Index, which moved up by as much as 7.4 and has moved back above the mark of 12.4. Now 12 is a very crucial level that a lot of these analysts are watching out for, because this means that there will be anticipation of more volatility as we move into trade. That said, in terms of the Nifty put call ratio, considering the fact that the Nifty has come off to a certain extent, the Nifty PCR has also fallen to 1.5 from 1.6. Moving on, let's also take a look at some of the changes. Now, it was a day when we didn't see too much turnover. Because of that, we only had a lot of activity in the 10,200 calls and puts. So while we saw a lot of writing in the 10,200 calls, there was also unwinding in the 10,200 puts, considering the fact that the Nifty moved back below the mark. Let's also take a look at some of the key stocks. And, we did have a lot of activity in the India telecom space. So Bharti Airtel looking at fresh longs with OI moving up by as much as 3%. And similarly, Idea Cellular as well, looking at around 2.5% increase towards open interest. But on the whole, again, Alex, we will be watching out for the Nifty and whether or not it moves back above the mark of 10,200.
Absolutely. Thanks so much for that, Agam. And Agam will be back with the daily show on futures and options. You can catch that at 10 a.m. today. It's the start of a new Samvat, and we spoke to a whole host of market experts to find out about their stock picks for the new year. Here's Devin Choksi and Pashupati Advani on what they make of Samvat 2074.
All sorts of crazy things happening in the markets and in the space, and that all means higher valuations. I think that's what we're really looking for. There's a lot of domestic money coming into SIPs, and now something new called STPs, where you put the money in liquid fund and you move it across every month. So those are that I believe the number for equities is about 5,000 crores a month. So that's not a small number. So I think those are the pluses that are actually helping our markets do well.
In large cap space, you find that some of the stocks are available at a valuation which is far more discounted to the general average of the market. Which means that I think people have somehow or other refrained from buying the quality stocks in the name of whatever the uncertainty it is having. To my mind, I think this is a fantastic opportunity. If you get a company like Reliance which is traded with such a size of balance sheet, at a valuation which is discount to the market. If you get companies like Tata Motors traded at a valuation which is significantly discount to the market, if you get banking stocks, even though I agree that non-performing asset related hangover is there, but I would like to take a contra bet on banks like SBI or even for that matter ICICI Bank, where you are getting, if you remove the investment out of those banking stocks, you are getting the stock at 1 to 1.2 price to book value.
And there's a lot more where that came from. Log on to BloombergQuint.com for all the calls from these experts on the new Samvat. Let's take a check on the rupee and the bond market now. Saloni Dhanuka joins us now. Morning, Saloni. Dollar strength building up.
Absolutely, Alex. Since Indian currency as well as bond markets were closed last Thursday and Friday, we have seen that Asian currencies were trading weaker on Friday on the back of dollar index gaining close to 0.5% on the back of US tax reform plans by the government. Now, talking about the rupee, how it performed on Wednesday and what's lined up for trade today, it ended flat against the US dollar at 65.04 levels on Friday. The home currency did breach the 65 mark in the opening trade to touch an intraday high of 64.93. However, during the day's trade, it was pressurized by the local equities and it ended flat against the dollar. Also, the Reserve Bank of India's weekly statistical supplement released on Friday showed that the foreign exchange reserves data increased by $1.5 billion and it reclaimed the $400 billion mark for the week ended October 6. Dollar rupee is trading flat in the non-deliverable forward market, indicating again a flat opening for the Indian rupee. Talking about the bond market, the 10-year benchmark yields again ended flat at 6.76%. And lastly, the global funds reduced their rupee debt holdings for the after snapping 11 days of gains. They reduced close to 75 crore on Wednesday, according to NSDL data, Alex.
Of course, Saloni, and those two markets have a lot to catch up on. They've been closed for 2 trading sessions last week. But for all the updates in the commodities space, we have Bloomberg Quint's Jayesh Khilnani. Jayesh, gold has now fallen for 5 weeks out of the last 6. What's the update there?
Absolutely, Alex. So, we are seeing a huge cut as far as gold prices are concerned. 5 out of 6, in the last weeks have been negative for gold and is currently trading at about 1275 mark, which is significantly lower from the recent high of about 1340 that we saw during the last month. Now, the 2 primary reasons for this. One is, of course, you and Saloni spoke about the dollar index, which has gained momentum. That has not boded well with the gold prices. The other one is that the US Senate vote that has showed renewed momentum as far as the president's tax plan, tax cuts are planned out. So that is not working well with the gold prices. Similar is the case with the base metals that we are seeing in Shanghai Futures Exchange, which are trading lower. But tell you what, Alex, in the morning, steel was down about 1.5%, but it has recovered significantly from the day's low and is currently trading in positive. That is because we have seen that China is now going to prevent illegal steel plants to come back to the market. So that has gone down well with the organized players, and hence we are seeing that uptick. But the other base metals zinc, aluminium, and the others they're trading with a cut of about 0.5%. Moving on to oil prices, now oil prices have been kind of stable near the 52 mark as far as WTI is concerned, and Brent is trading just below the 58 mark. Now we understand that the Saudi minister is going to discuss the oil output cut extension with Iraq. So that's the update on the commodities front.
Thanks so much for that, Jayesh. Let's shift focus now to earnings. Hindustan Zinc will be the first pure-play metals company to come out with its second quarter earnings. Nikki Merchandani is standing by with all the estimates. Nikki, morning.
Hi Alex, we're expecting a good set of numbers coming in from Hindustan Zinc. To begin with the top line, we're expecting a 58% growth there at 5,502 crore as compared to 3,462 in the corresponding quarter of the previous year. This is mainly on the back of higher LME zinc prices that we have seen both on quarter-on-quarter basis as well as year-on-year basis. The prices have risen as much as 33% year-on-year and 15% quarter-on-quarter basis. We also are expecting some sort of strong volume growth coming in from the company. If you look at the profit figure, we are expecting a figure of nearly a 20% growth there at 2,293 odd crore is the number that we're working with. However, we are expecting some sort of pressure coming in on the margin fronts there. Margin is expected to contract to 54% as compared to 60% in the corresponding quarter of the previous year. This is mainly on the back of higher cost of production that we're looking at for this company. But then volume growth is expected to be on, we're expecting a strong growth of volume. Be it on the zinc side, we're expecting a 28% growth coming in on the zinc side. Lead volume are expected to rise as much as 25 odd %, and silver volumes are expected to jump up by as much as 20 odd %. So net, we are looking for good set of numbers, but yes, we are also factoring in some kind of margin pressure coming in on account of higher cost of production.
Thanks for that, Nikki. On to the new listing today. India's first and largest power exchange, IEX, is all set to get listed. A peculiar regulatory hurdle had forced the exchange to change its anchor book allocation on the last day of its issue. Jayesh Khilnani is back to tell us about the expectations for the listing. Jayesh?
Alex, promises to be, very interesting IPO listing that we have. Indian Energy Exchange, that is India's first power trading exchange, will get listed on the exchanges today. Now, to tell you something interesting about the company, there are no promoters per se to this company. It's a professionally managed company, and a lot of private equity players have backed the company. So, this is an entirely offer for sale IPO, and the proceeds will not go back into the company. In fact, they will go back to the seller. Now, to tell you more about the IPO that we had, so the issue price, had been set at about 1,650, and the size was 1,000 crores that they were looking to sell for their 20%. Now, as far as the subscription is concerned, overall it got subscribed about 2.3 times. That's how the breakup turned out. So the institutional investors, they got about 2.5 times, over subscription. Non-institutional players, that was, a little subdued. Retail participation was also, very healthy at about 2.5 times. And like I was telling you, the total subscription was about 2.27 or 2.3x. Now, going to the listing scenario that we have, so I've taken the base price and plus or minus, approximately 10%. So if you look at 1650, which was the issue price, the market cap at that issue price will be nearly 5,000 crores. Now, this is, in line with the other exchanges that we have listed on the Indian exchanges. So to say BSE and MCX, both of them trade about 5,000 crores market cap. So by that stretch of imagination, looks to be a little expensive. The PE at that particular price would turn out to be nearly 44 times, which is again on the healthier side as compared to the other exchanges. Now, if it opens at a discount, let's say at about 1,500 rupees, in that case too, the market cap is going to be about 4,500 crores, and the PE just shy of that 40 mark. In case it lists at a premium of, let's say, 1,800 rupees, in that case, this will be India's most valuable exchange that we have, with a market cap of 5,500 crores, and the PE would stand at nearly 48 times. Now, Alex, the regulatory issue that you were mentioning, this was a very peculiar situation which turned out. So what happened on the penultimate day is that they had to revise their anchor book allocation, which was previously it was 300 crores for the anchor book, which got revised to 130 crores. So that was a shaving off of 170 crores. What this did was that the 170 crores which was removed from the anchor book got back added to the QIB section. So the QIB section now stands at about 370 crores, which actually saw a very healthy demand. So it will be very interesting to see how the actual listing happens.
Right. Thanks so much for that, Jayesh. Now, in what seems to be a big boost for Dr. Reddy's, the US Appeals Court has overturned an earlier district court decision by ruling that the company's Nurva ring patent is valid. Darshan Mehta joins us with more on that.
Well, Alex, I'll tell you what this means for Dr. Reddy. First of all, the entire scenario plays out if Dr. Reddy gets the ANDA approval, and that is in 2018. So clearly, this is a sentimental victory that Dr. Reddy has. First of all, what does this mean? This means that Teva now will be not eligible for the 180-day exclusivity that it was looking for, and it means that all the ANDA filers will now be able to launch their product post the patent expires in April 2018. So that's very positive. And probably that's what analysts will now be able to move up their estimates for NuvaRing as far as the patent is concerned. Morgan Stanley's come out with a note on this in terms of what they mean for the scenario. They believe that the target action date that the company had indicated was in the fourth quarter of FY18. It's a $780 million branded sales, and it is very positive for Dr. Reddy's in terms of their economic potential for this drug. Dr. Reddy could generate sales of $120 million with very high margins on the 12-month basis once this launched the product. And this is assuming a 2 to 3 player market, 50% price erosion and 30% market share. So extremely positive sentimental news coming in for Dr. Reddy. But however, the ANDA approval is yet to come, and the drug launch will be only in 2018. So that is something that you have to watch out for. But nevertheless, a sentimental positive that's coming in for Dr. Reddy's.
Thanks for that, Darshan. Now, Shraddha Babla is here with the stocks in news. Morning, Shraddha. What's on your list today?
Morning, Alex. To start off with HCL Infosystems, which has its board approval to raise up to 499 crores via rights issue. This when the market capitalization of the company is slightly northwards of 1,000 crores. So the rights issue price has been fixed at 47%, and the entitlement ratio has been fixed at 10:21. We will also have Hindustan Unilever, which will be in focus after the parent company Unilever said that the volume growth in India was yet to recover and go back to the pre-demonetization and pre-GST implementation levels. They did say that there has been an improvement in volume post the introduction of GST. Nevertheless, the price growth has been lower because they have passed on the benefits of lower taxes. So the company is cautiously optimistic as far as the near term is concerned, and very positive in the medium to long term prospects as far as the Indian economy is concerned. You have Gayatri Projects, which according to a Financial Express report will be creating a separate firm called Gayatri Highways, and where it will be spinning off its 7 toll road businesses. Now the new entity will be listed on the exchanges before the end of the current financial year, so keep an eye out on that one. You also have Eveready Industries, which has said it expects to earn about 300 to 400 crores in the next 5 years from small home appliances. This is based on an ET report. And on the profitability front also, the new businesses are expected to break even at least at the EBITDA level in this financial year itself. And lastly, we have Gujarat Fluorochemicals. Now according to a PTI report, the US has started anti-dumping probe against PTFE resin, which is polytetrafluoroethylene resin from India. Now Gujarat Fluorochemicals is the producer of this resin, so there could be some negative development on this one. So all of these to watch out for, Alex.
Thanks for that, Shraddha. Now, Macquarie has initiated coverage on the cement sector. Soumit Sarkar is here with more on that brokerage note.
Now, they have initiated coverage on the India cement sector. Now, they are expecting a strong volume growth, pricing power and stagnant cost over FY17 to FY20, which will boost the cement sector in India. Now, they're expecting the cement demand to grow at 5%, 7% and 8% rate in FY18, 19-20 over a negative 1% growth rate in financial year 2017. Now, this demand recovery is expected to come in from government's Housing for All scheme and the infrastructure capital expenditure. Now, they're expecting the cement prices to grow at a compounded annual growth growth rate of 4 to 5% over FY18 to FY20. On the cost side, they are saying that the pressures are unlikely to rise further, and so they are expecting the cost inflation to ease to 2% CAGR over the next 3 years. Now, the pecking order is Dalmia Bharat, Shree Cement, Ultratech, while on Ambuja and ACC they have neutral rating. For Dalmia Bharat, they have an outperform rating with a target price of 3,500, which suggests a potential upside of 30%. For Shree Cement, it's an outperform rating with a target price of 23,100, which suggests a potential upside of 26%. For Ambuja, it's a neutral rating with a target price of 300, which suggests a potential upside of 8%. For ACC, again, it's a neutral rating with a target price of A1840, which suggests a potential upside of 3%.
Thanks for that, Somit. Now, Prime Minister Narendra Modi, who inaugurated a ferry service in pole-bound Gujarat on Sunday, spoke about building modern ports across the country, highlighting one of his government's flagship projects, which calls for the interlinking of waterways in the country. Modi said a blue economy, or in other words, a water-based transport system, will pave the way for further growth.
इंफ्रास्ट्रक्चर और कनेक्टिविटी दो ऐसे क्षेत्र हैं जिन पर यह सरकार अधिक से अधिक शक्ति लगा रही है। साथियों, सरकार के प्रयासों का ही नतीजा है कि पिछले 3 वर्षों में पोर्ट सेक्टर में बहुत बड़ा परिवर्तन आया है। अभी तक का सबसे ज्यादा कैपेसिटी एडिशन पिछले 2-3 वर्षों में ही हुआ है। जो पोर्ट और सरकारी कंपनियां घाटे में चल रही थी, उनमें भी परिस्थिति बदल गई है। सरकार का ध्यान कोस्टल सर्विस से जुड़े स्किल डेवलपमेंट पर भी है। हम इस अप्रोच के साथ काम कर रहे हैं कि ट्रांसपोर्टेशन का पूरा फ्रेमवर्क आधुनिक और इंटीग्रेटेड हो। पहले लोग सिर्फ ओशन इकोनॉमी के बारे में बात करते थे, लेकिन हम ब्लू इकोनॉमी के बारे में बात करते हैं। ब्लू इकोनॉमी यानी इकोनॉमी और इकोलॉजी का गठजोड़। ब्लू इकोनॉमी की क्षमताओं का ज्यादा इस्तेमाल न्यू इंडिया का आधार बनेगा।
He also said that important decisions on economic reform would continue. Now, there's a lot to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. Revenue Secretary Hasmukh Adhia has said that with the GST firmly in place, the tax structure now needs a complete overhaul so as to reduce the burden on small and medium businesses. In an interview with PTI, Adhia said that the regime will take about a year to stabilize. Bajaj Auto has been toppled by Honda motorcycle and scooter in the two-wheeler pecking order. Honda was India's second largest bike seller during the first half of the current fiscal. While Honda's sales grew almost 20% during this period, Bajaj saw its sales fall 10.45%. Hero MotoCorp, however, remains the undisputed leader in the segment. An already stressed banking sector is staring at further non-performing assets worth 40,000 crore rupees. This comes after the Reserve Bank of India directed Axis Bank to classify 8 consortium accounts as non-performing. Estimates suggest that the total outstanding loans of these accounts at the end of June 2017 stood at 42,000 crore rupees. Now, legal experts have lashed out at an ordinance passed by the Rajasthan government prohibiting investigation against judicial officers and public servants without prior sanction. They say that the ordinance is unconstitutional and serves no purpose other than to intimidate the press and citizenry. Well, that's a wrap on this edition of Daybreak. Do stay tuned to Bloomberg Quint.